Despite the ambition of a free trade agreement between the UK and the EU after hoped for successful talks between the two parties, there's a growing worry that there will be a so-called hard Brexit or cliff edge come March 2019. Robert Oulds is director at the Bruges Group and he joins us now. Robert, welcome. What's your base case from where we stand at the moment? We've been hearing a lot about the negotiations and lack of progress especially. What's your base case for where we are now and where we're going to end up?
Well, basically, I don't think there is such a thing as a hard Brexit. That's a misnomer. Of course, a lot of people on my side of the debate use the term a clean Brexit. But basically, if we come out of the European Union, there are other agreements, there are other organisations that facilitate trade. It's not just the World Trade Organisation, you've got the World Customs Organisation, you've got the United Nations Economic Commission for Europe, all there to facilitate trade. And the European Union has signed up to being open to its neighbours, it's signed up to agreements on access for services, which should come about eventually. They signed up to other agreements that will make sure that Britain, will be continuing to trade with the EU once we're out. There would not be this cliff edge. This just doesn't exist because we're signed up to agreements and so are the European Union, and they have a responsibility to keep trade open, as do we.
Absolutely, trade is both sides, of course. But these other agreements do cost extra or more than they would be if there was a free trade agreement. I mean, we're hearing, amongst other things, one report suggesting WTO rules would cost 65.5 billion sterling a year to business and would lower GDP over 15 years by between 5.4 and 9.5%. Now, WTO is only one of those scenarios that you quoted. There are other quotes as well on other agreements that are out there, but they all cost British business money, don't they?
Well, we have the cost under WTO rules of European Union tariffs. Those tariffs, though, if that does come about, that the EU imposes tariffs on us, the cost of that would be less than what we're giving to the European Union each year at the moment, and of course it's already been offset by the reduction in the value of the pound, which has actually boosted our exports. So really the figures of the tariffs would be around the 10 billion mark, less or more depending upon the volume of trade. So really there isn't evidence to suggest that trade would be harmed by as much as 65 billion and the economy costing that much if we went to WTO rules, because the costs would be actually minimal compared to many of the savings that have already come about. And of course we also have the issue of trade in services. The European Union has to keep its markets open to services to other countries that have similar standards, not identical but similar. European Union and the UK already share similar standards, so according to their own rules, their own legislation, they should keep their financial services market open to the city as well. So there really shouldn't be this problem.
Those standards is an interesting point as well. Jacob Rees-Mogg is quoted as saying that a hard Brexit would boost the UK by 135 billion over 5 years, but only with free trade, reduced regulation and lower taxes. Now, free trade is going to be an issue if we don't pay anything up to 50 or 60 billion euros that the EU is demanding. We've heard recently that there can be no agreement if we are going to be a low regulation, low tax economy, which the European Union says wouldn't match their standards and regulations. So we've got to have an agreement on some of the basic rules, not least of which is the money that obviously ultimately will end up presumably having to flow between one and the other. But our standards are not going to be the same according to Jacob Rees-Mogg. That's the only way we're going to benefit.
Well, if we do the right things when we're outside of the European Union, we open up our markets, we go back to the UK that we were throughout history before we joined the European Union, which is being open to other countries around the world and really inventing the concept of free trade, and it benefited this economy, this country, going back into history, and it will in the future once we're outside of the EU. But you're absolutely right that the European Union doesn't like such policies. They like a protection for their own vested interest, and they certainly don't like low taxation, unless of course it's the various companies that have made sweetheart deals with Jean-Claude Juncker's Luxembourg. But without that, the European Union wants high corporation tax. We don't in this country. We want to cut corporation tax. We want to make Britain as competitive as possible. And if the European Union doesn't like that, that will be their loss, because Britain going into the rest of the world will of course grow once we have the right policies in place. But it's only if we have a government that's actually willing to put through things like low taxation, deregulation in various sectors, and of course being open to trade to the rest of the world, as well as hopefully the European Union.
Okay, let's take a look at in your world as to who would benefit, which sectors, which sort of companies would benefit from some of the ideas that you've got and the relationship we'd have with Europe. Which sectors are most going to benefit from that?
I would have thought financial services industries would benefit more than any other sector. The European Union doesn't actually like to make free trade agreements with other areas around the world that include trade in services. They're meant to open it up under the General Agreement on Trade in Services, GATS, but they don't generally like to do so. Britain, we know this is our strength, and some people in the EU don't actually appreciate what the city does. They'd like to take a few jobs, which is not going to happen in a big way, and the evidence doesn't suggest that is happening. But Britain has this excellent jewel in our crown, which is financial services. If we can make our own trade agreements, we'll open up our financial services industry and other countries around the world to trade in services, and that will really benefit us. That will actually make us grow. And that runs contrary to what a lot of people think in the city. They need to look at the opportunities out there and the rest of the world, which is growing, and the EU, which to the best part is stagnating. There's been a little bit of growth in the EU recently, but it's not very strong.
But nonetheless, banks in the UK do need a good relationship with Europe, and we're hearing as well that if the situation breaks down to the point where there is going to be this acrimony, we're then going to find it difficult to get the passporting right. So we're not going to be able to sell our services across the European Union. That's going to be a massive problem for the financial services sector, surely.
Well, under European Union law, we should get the passporting rights because there is the similarities between how the businesses are regulated, and of course at the moment it's identical. So really this should be something that will help the UK, and really we've got to remember that actually, the City of London of course needs access to the European Union's market, of course it does, but Germany actually has a trade in services with the UK, a surplus in trade in services with the UK. That's something that's astounding, and they actually rely on a lot of their finance from the City of London. So to cut off the City of London against their own rules would be damaging their own interests in a very severe way, and they need to remember that.
Yeah, we've just had a budget. Expectations are that growth is going to slow down, possibly to 1.3% next year after 2019. We've seen more evidence today that there's been a drop in business investment. I mean, this is all to do with Brexit, isn't it? This is all to do with the worry about the fact there's as yet no agreement. Surely that is going to dig us deeper and deeper into a fiscal hole, more and more difficult to get out of, next budgets and so forth. And yeah, the economy didn't go into recession as some had been predicting immediately after the Brexit vote, but surely at some point something has got to give and the British economy is going to snap.
Well, it's not been the evidence so far. The evidence has been quite the reverse. Yes, of course there's difficulties in the British economy. These difficulties have been around for quite some considerable time, such as on productivity, which is arguably encouraged by the fact that we're relying on cheap labour and we're importing cheap labour rather than investing in tooling and technology and machining that would actually help our productivity go forward. So that's one of the main aims of government at the moment, to raise productivity, but we can't whilst we're in the European Union, burdened by, in many cases, excessive regulation and, of course, just relying on cheap labour, which we're importing from other countries who are devoid, in some cases, of young people. So the economy will do well in Britain if we make the right decisions, as Jacob Rees-Mogg had pointed out. As long as we do the right things, Britain will go from strength to strength, and the European Union will rue the day that they place such restrictions on us they wouldn't come to an agreement.
Okay, 11 p.m. on was at the end of March 2019. Where do you see us?
I think political heads will be forced together and there would be an agreement. And what we really want to avoid this cliff edge is the European Union to recognise that yes, you can still access our services market because we want to access yours, and of course goods can continue to flow across the borders without unduly complex customs checks, and then we'll be, everything will be okay in that situation. So I can see that some kind of agreement will be patched together. They'll fudge it as they always do and interpret it what it means later and move forward.
Okay, all right, Robert. Thanks indeed for joining us. Robert Oulds is director of the Bruges Group with his view on where we are in terms of the Brexit negotiations, with a view ultimately to that date in March 2019.